we get to different levels in our careers, when we get to different levels in our life, to reflect back on what we heard around the dinner table, on some of the experiences that we saw, because the reality is those do impact us. Those do drive some of our decisions. So for yourself, how did that, being in that entrepreneurial family, seeing the ups and downs, what type of degree did you decide to get, and what was your first job move?
Seeing an entrepreneurial dad, and kind of the concept was you got to go earn your keep. If you're not going to work hard, you're not going to make anything. So we had kind of the allowance like most people, but it was barely minimum wage for a kid, right? You know, it wasn't paying the bills. So if you wanted to go make more money, you got to go earn it. So I remember, you know, we would do all these different things. I'd like create these carnivals for the whole, you know, neighborhood and charge them money to come play these games I made up. We started doing lemonade stands, but we were on like a really slow street, so we didn't get that much traffic. So, you know, we started like going door-to-door sales. And so a lot of the kind of entrepreneurial foundation was built there, but went to school and, you know, didn't really know what I wanted to do. At that point, my dad was doing a hedge fund. He was doing trading, stock market, and had got somewhat interested in finance. And so took a finance kind of path and got a degree in finance, got an MBA after that, and just fell in love with it, to be honest. I've always loved money in the sense of it's fun to count your winnings and how do you maximize it? How do you grow it? How do you save more? How do you invest and get better returns? Like those are things I've always just been naturally wired for. It was kind of somewhat serendipitous. Obviously had a lot of mentorship, you know, partly with my father too, and kind of deciding what was the right path.
What were some of the steps in between that got you to, before you started Aspen Funds, what were some of the things you did earlier on in your career that helped prep you to actually be a partner in the firm?
I had a pretty winding road. I think for me, I was pretty motivated. I wanted to grow very fast. I've always been very curious, and some aspects of the corporate world appealed to me. I'm a natural maximizer, so if I have, here's all the constraints, how do you work within a system and perform well? So I always did well in that, but I always, at the same time, disliked the constraints. It's like, I just want to move a lot faster than some of these companies want to move. So I just tried lots of different things. I did actually ended up doing door-to-door sales during college, learning kind of some sales skills. That was, you know, very, very important to kind of, for me, balance out some of the real technical training that I was having, and, you know, all the kind of career-focused books and things, you know, self-improvement stuff I was reading. It's like, hey, you got to have sales. No matter what position you're in within a company, being able to sell is really, really important. So I wanted to grow that and put myself in positions I had to. Did several different like random sales and roles, and then kind of got into the asset management side. So I was working for a large asset manager that had several ETFs and mutual funds that were traded in the oil and gas midstream space, and got a really cool exposure to equity institutional investing. These were big endowments, you know, pension funds, foundations that we were working with, as well as kind of the retail side, but I was more on the institutional, and very eye-opening experience. And then from there kind of shifted into commercial banking. You know, shifted to banking was look at the personal financial statements of all of these borrowers that we have. And It was kind of a boutique bank, so we're focused on like wealthy business owners was the kind of clientele. And so I got to see exactly how much they're making from their tax returns, where are they investing, how have they built their net worths, talk about education, all the things that I got to see was so cool.
So one thing here for our technology employees, we get overexposed sometimes in a single stock for a company that we're working for, or we do venture funding. Give us a view, when you look at that personal financial statement and you think about what's a pattern that you saw with the ultra wealthy that doesn't get fed to us. We get a lot of messages from these larger financial services companies, stuff everything in your 401k, get everything into growth equities, 4% rule. What patterns did you see that you'd share with us?
The wealthy generally own businesses, and they generally own real estate. Whether the real estate is what caused them to build the wealth, that's usually someone professional in the industry. But regardless, these people are investing in real estate, and a lot of times they own businesses, right? That's one of the biggest amplifiers of building wealth. And so it actually, it's a great thing you bring that up, because part of our focus now on our podcast, Invest Like a Billionaire, is studying the ultra wealthy, because it got me so interested in saying, what are the ultra wealthy doing? And what really got me interested is it's not just like a little bit of, adjustments that, most people need to make relative to what these ultra wealthy investors are doing. It's completely different. And so, what I saw in the bank was kind of a microcosm of that subset of borrowers. And what we've seen, on a bigger scale with a lot of research that we can back it up with is generally these ultra wealthy investors, whether it's a family office, whether it's an endowment, foundation, pension, they're largely and heavily invested into private equity real estate, private equity businesses, and venture capital. And those three usually make up close to anywhere from 30 to 50% of their portfolios. 30 to 50. And the average retail investor maybe has 2 to 3%. And if they own Airbnb, or if they, own a a rental or something, maybe that boosts that percentage up a little bit. But by and large, there's a pretty big gap. So that's really what we're passionate about, is helping people understand, these types, this whole world of alternative investing.